NIO stock is on a non-stop roll. It just hit all-time new highs 2 days in a row, 21.12 on Tuesday and 22.59 on Wednesday. This really is incredible. I still vividly remember the days when the stock was rolling around in the dirt at $3 and $4 per share. Why didn't I buy more shares at this point? I ask myself that literally every day. For today's video, I want to outline why the stock is rising, where it is heading in the short term, if it is currently a sell, hold, or buy, and cover insights into their September delivery numbers and third quarter performance. What is up, NIO gang? It's your boy Nick back. Hit that subscribe button. I do a ton of videos like this, keeping my subscribers informed, up to date with all EV news, covering initial public offerings, penny stocks, and high growth stocks. You don't want to miss any of that, so hit the subscribe, smash that like button while you're down there. I'd really appreciate it. Without further ado, no blabbering, let's just get right into it. What exactly is on investors' minds? Question 1. Why is the stock rising so much? Well, there are in fact many catalysts that started this chain reaction, but something kept the bull running, and it's this. NIO is often categorized into the electric vehicle hype stock category. Many investors actually just buy shares when NIO is on a run, well, because other investors are buying shares of NIO. This starts a snowball effect, and investors buy on gain days due to FOMO, which is actually precisely not when you want to buy, but that's a video for a different day. If we look at the New York Stock Exchange's most active stock charts, guess who? NIO. This stock has come so far in such a short period of time. It really feels like one of my old friends that got famous or something. I don't know. 2 months ago, no one knew about this stock, and now it's the most active traded stock. It's incredible to me. So what was the catalyst that began this massive surge? Even though the delivery numbers in July and August were phenomenal in and of themselves, these numbers could have been potentially even higher if NIO had not run into supply chain issues. Lee Bin, in an interview with Bloomberg, declared that the supply could not in fact keep up with the demand in the months of July and August, and that they would have even sold more vehicles if these supply chain issues had been mitigated. If you have been following NIO for some time now, you may remember some tougher days in the earlier part of the year. Delivery numbers weren't great, the health situation was already taking hold, there was shutdowns looming, and NIO, using a very conservative estimate and analysis, weren't actually predicting to reach these high delivery numbers, which are, in case you haven't heard, brinking on 4,000 per month. Because of this, and because NIO essentially outsources their entire operation, their supply chain partners and manufacturers were not set up and ready for this coming surge. Lee Bin went on to state that he and the team at NIO are working hard to solve this problem, and that he believes that supply chain capacity will have improved in the month of September and in the coming months. They will continue to work on this problem and really ramp up production of their newest vehicle, the EC6, in the coming quarter. So catalyst number 2. On the topic of the newest vehicle, the EC6, which also happens to be my favorite, this is a vehicle that is expected to do huge numbers. Analysts are seeing a trend to a smaller vehicle, such as the EC6 in China. This vehicle, which acts as a legitimate competitor against the Tesla Model 3, which has dominated the Chinese market, began deliveries just last Friday. I think some of the optimism surrounding the EC6 may be just reaching the greater mass public right now, which is most likely relating to a surging stock price. Catalyst 3. Now on to what I think was a real spark for investors. In the interview with Bloomberg, Lee Bin goes on to state that battery costs have been declining in the industry at large after receiving a question regarding Tesla's hope to bring future vehicles down to a price of $25,000. He says that this declining battery cost is really helping their margins. NIO reached a gross margin of about 10% in Q2, and he says this will increase each quarter. That is the key word, will. This suggests, well, almost implies that NIO will be releasing a Q3 margin above 10%. This is absolutely huge for their business model strength and undoubtedly their bottom line. Margins for a startup company, especially a startup electric vehicle manufacturing company, are really hard to achieve in the positive. So the fact that NIO is already doing this and declaring that they will be able to increase their margins quarter after quarter is fantastic news for the company and for investors. He is also really optimistic in the fact that the declining battery costs will help bring an even wider audience to electric vehicles in the near future. Lee Bin then goes on to state that NIO's average vehicle price is much higher than Tesla's average sale price. The average NIO is sold for on average about $15,000 USD more than the average Tesla within China. NIO is a luxury brand, and he is definitely creating that image and reinforcing it by sort of flexing this fact that they are able to sell these relatively expensive vehicles amidst a bruised economy and a bruised overall market. market. These expensive vehicles and sale prices is what allows NIO to have these fantastic vehicle margins of over 10%. But he does, however, continue to say that NIO is striving to lower these vehicle prices in the future. I like that he does this, almost playing both sides of the field. On one hand, reinforcing that they are indeed becoming a successful Chinese brand electric vehicle luxury company. However, that they are striving to bring this luxury to a wider audience in the coming years. He does make it quite clear, though, that this is not a top priority for them in the short term to bring this to a wider audience. So I really do think that this interview and hype leading into their September and Q3 deliveries is really driving up the share price currently. They are obviously on the right track. They are buying even more of the company back from local authorities in Hebei province, which own the Chinese division, aptly named NIO China. They have just begun deliveries of the EC6, and this vehicle, in my opinion, will do absolute numbers in the Chinese market. I just think overall, it's a great time to be an early investor of NIO, and even a new investor of NIO. But would I currently buy now? In short, for me, my answer would be no, not right now, and I'll tell you why. Li Bin in the interview strongly pushed the subject of strained supply chain issues. This may have been somewhat of a hint that manufacturing may have also been strained in the month of September, and that delivery numbers may be somewhat underwhelming. Now for me, being an early investor and planning on being a long-term NIO investor, this would actually be the best thing for creating another nice entry buy-in point for the stock. If subdued delivery numbers come back from the month of September, many investors who may not be privy to the info that these potential subdued delivery numbers were simply due to supply strain may run for the door and sell, fearing slowing growth. If the stock slips and dips, I will personally be buying additional shares, as I do have faith in the company. It is in good hands, it is on the right direction, and I really do see great things for this company moving forward. But I won't be personally buying after this nice surge they've had the past couple days. I would not be surprised in the least to see the stock back down to around the $17-18 range, which seems to be an emerging support line in the coming weeks and months. This will be my personal buy-in point, as with a lot of hype and buying of stock, this usually comes with a sharp correction in the following weeks once some of the hype is worn off. As I've previously stated, we can obviously see huge interest in this company and this stock right now. A few months ago, it seemed like no one had even ever heard of this company, and now bam, right into the spotlight on top of the NYSE. Anyways, everyone, I hope that this short little video brought you some benefits, some insights. I try to keep my videos unbiased and share the bad news with the good news, but I really do think this news is overall in the good column for NIO. Thanks so much for watching. I do really think it's important for you to come to your own financial conclusions, formulate your own decisions, take in as much research and analysis as you possibly can to come to your own conclusion. That's your duty as an investor. Don't just take my word for it because I'm saying it on the internet. Anyways, everyone, thanks so much for watching. If you haven't already, hit that subscribe button. I really would appreciate it. I do a ton of videos like this, keeping my subscribers in the loop, ahead of the game and ahead of the curve. Smash that like button. It really helps out the YouTube algorithm. Anyways, everyone, thanks so much for watching. I've said that 10 times now. Take care. Cheers.